Well, we have another guest now joining in. The Centrum Group is the newsmaker today. Now, the group has just sold off its money exchange business to Ebix for a valuation of 1,200 crore rupees. Now, what's the strategic rationale? What's the way forward for Centrum Capital? Jaspal Bindra, Executive Chairman of Centrum Group, joins us on the show to share some thoughts and insights. Thanks very much, Mr. Bindra. Pleasure having you on Closing Bell. Now, let me start with the basics. I mean, this is a fairly significant amount of money that's come into the group. So, what's the thought process? I mean, where are these funds going to be deployed? What are you thinking?
So firstly, we are delighted to have completed this sale. We think it is a very good value we've received. And equally important, we feel that CDL, which is the business we have sold, Forex business, is actually going to get a very good home in Ebix. We are obviously sad to be divesting a business which is a 20-year-old profitable business for us. The proceeds that we get, we obviously have a lending business which is in its early days, and that will require some amount of capital feeding, which we'll be happy to provide from these proceeds. There will be some which will go down to pay some debts. And then I think we will still be left with a pretty neat sum for other opportunities, both organic and inorganic.
Okay, we'll come to that in a bit as to what you plan to do with the rest of that money, Mr. Bindra. But if you can also tell us what percentage of your total turnover comes from the Forex business currently, and now with this divestment, what will be left behind in the entity?
So, in terms of the contribution of the Forex business for the current year, 17-18, which is just complete, I think it will be just over 50% was from Forex.
Okay.
And the rest of it makes 50%. So that's kind of the breakup as of today.
So now that, the strategic focus is changing, what's your targeted revenue pie, sir? 50% of Forex goes away. As NBFC scales up, lending scales up, I mean, I've read some comments where you're interested in the asset reconstruction business as well. What's the targeted revenue pie for Centrum, say a year, 2 years down the line?
So, first things first, I think our wealth business is scaling up wonderfully, and it's turned profitable this year, and it's likely to be increasingly profitable over the next few years. So that is one from within the stable. Clearly the lending businesses are pacing up as well, but they will probably see larger contributions over the next 2, 3, 4 years, but they are building very well. And we feel that there is room for us to enter a couple of white spaces. I think we have been public earlier about exploring some opportunities in insurance. On asset restructuring, I think we are just understanding that space right now. It may be premature for us to make a full-hearted attempt yet.
Okay. So you did talk about how 1,200 crores, the proceeds will be used part for the lending business and part for paying of debt. But what is the policy to give money back to shareholders? Because now with this deal, 50% of your business goes away from the listed entity. Do you have any plans to give back to shareholders either in terms of a special dividend or any kind of buyback?
Well, the company that we sold is 100% owned by the parent listed company. So clearly, our bit of that is, goes accreting to all the money goes into the parent company. That's where the liquidity is. And I think the money is better spent today. I think the opportunities that we have ahead of us are so attractive and compelling that we would rather reinvest today than to distribute. As promoters, we are the largest holders of the company, but we would rather reinvest in the company than take money away.
So, Mr. Bindra, help us, with at least maybe a rough ballpark estimation of how you're going to segregate this 1,200 crores into new businesses. You mentioned lending, so how much do you think goes in there to augment your capital base? And on insurance, an area you're keen at, is that where you're looking for inorganic opportunities? And again, a ballpark size of the acquisition in that case.
I think broadly about the proceeds we receive, post-tax, etc., 30% of that will go towards capital of the lending businesses, and probably about 10-15% or so will go towards debt reduction. And then we have roughly 50% available for new investments and new opportunities.
So is insurance one of them? And again, anything inorganic that's on the radar? Lots of names have been doing the rounds, Royal Sundaram, etc. Perhaps a lot of deals in the market. Are you chasing anyone?
No, nothing concrete yet, but we are always in conversations. We are always scouting for opportunities, and we'll continue to do that.
Okay. You did also mention about how the focus will now be on the wealth business, and the wealth business has turned profitable in FY18. What kind of growth do you see over there, and what kind of investments will you put back into the wealth business going forward?
Well, we think the wealth business is going to gallop quite fast. It has actually already in the last 1 year. We are now in excess of $3 billion in terms of our assets, and that's likely to in the next couple of years at least double, if not more. And the profitability is it's been a very profitable year for that business. We think those profits are likely to also double in the very next year. So it's looking very positive and on a steep run up.
So, Surbhi was asking you about acquisitions, but I also want to flip that over and ask you about any more sales, because once this forex business has been sold, would you look to sell any other part of any other, segments, either wealth, NBFC, anything?
Yeah, no, I think there was a logic towards divesting the forex business. The forex business is coming under severe margin pressure. And the only way to sort of continue to have sustainable growth there is by investing a lot of money into that business. And we felt that at this point, if we could get a 30 multiple of our current year PAT, which is what we asked and we got from Ebix, then clearly that money could be spent better on higher margin, faster growth, higher multiple valuation businesses, and that is why we decided to make that call.
Okay, I was actually
we don't see there's any other existing business which falls into that category.
Okay, in fact, I was just going to come to that. So you've done the deal at 30 times PAT. So now, how does that valuation compare to 2017 when you had sold off a small chunk as well to certain private equity players?
That was a lower multiple. It was a lower PAT and a lower multiple. So we are delighted that we could exceed our achieve on what we did the last time.
Okay, can you help us jog our memory? How much is the scale up you managed with this Ebix deal?
Sorry?
I'm just asking for the valuation, the higher valuation, the differential that you managed with the Ebix deal.
So I think the PE deal we did was more at a multiple of around 25. And now we've done it at 30. And obviously the PAT number has also moved up.
Okay, Mr. Bindra, thank you so much for joining us and giving us all those details, and all the best for the quarters to come. Well,